Friday's session was a collision of three major themes. Hot producer inflation and rising geopolitical risks are shifting the market's focus. At the same time, a sell-off in NVDA highlights a growing sense of AI exhaustion among investors, even though the company hit its earnings targets.
The morning dataset set a challenging tone as core producer prices jumped 0.8%, nearly triple what analysts expected. Even with the Chicago PMI signaling expansion at 57.7, the market narrative shifted toward geopolitical risks. According to Unrivaled Investing, falling yields suggest investors are bracing for a growth scare, while NANA reports that rising tensions are pulling focus away from the macro data. This pressure is most evident in the tech sell-off, where NVIDIA led the decline despite hitting its earnings targets. The compound highlighted a rare divergence, where the Nasdaq fell over 1%, even as more stocks rose than fell, signaling a struggle in concentrated megacap leadership. The morning data hit hard, with core producer prices rising 0.8%, nearly triple the consensus estimate. We also saw a surprise in the Chicago PMI, which hit 57.7 to signal robust manufacturing growth. Despite these hot numbers, NANA reports that the session quickly pivoted toward geopolitical risks, which helped drive the 10-year yield down to 3.97% in a flight to safety. The market is facing a clear paradox. Hot inflation data is hitting, yet the 10-year yield just dropped to 3.97%. Unrivaled Investing suggests investors are preparing for a growth scare, but this divergence also points toward a rising risk of stagflation. That shift could delay the first Fed rate cut until July. It was a strange session. The Nasdaq fell over 1%, even as more individual stocks rose. As NANA reports, risk-off positioning is now accelerating as geopolitical tensions escalate. Defensive sectors are seeing gains, while airlines face heavy pressure from the headlines. The market is currently wrestling with two specific risks. Unrivaled Investing suggests we're seeing a stagflation setup, where rising input costs combined with falling yields could push the first Fed rate cut all the way out to July. At the same time, NANA notes that geopolitical tensions are escalating in the Middle East and parts of South Asia. She observes that as diplomatic patience thins, these geopolitical premiums are beginning to carry more weight in the market than traditional economic data. NANA notes that risk-off positioning picked up today as tensions in the Middle East and South Asia weighed on the market. Safe haven demand is what's actually driving yields lower, rather than a bet on a more dovish Fed. While commodities and defensive sectors are seeing gains, airlines are feeling the pressure from these geopolitical headlines. NANA observes that the market's patience for diplomatic solutions is wearing thin. At this point, geopolitical premiums are likely to carry more weight than the traditional macro reports. NVIDIA recently delivered another beat and raise, but the market's response was surprisingly weak. Bella notes that this post-earnings sell-off has weighed on broader sentiment, signaling that even strong fundamentals aren't enough to drive gains right now. The compound suggests we're seeing a mainstream AI backlash, where public distrust is starting to outweigh initial excitement. This shift indicates that the era of effortless AI leadership may be entering a period of exhaustion. Market leadership is starting to shift. 42 Macro highlights that we've entered a new post-FOMC environment where the trade is finally broadening out. They forecast that investors who stay overly concentrated in the Magnificent Seven will likely underperform as this rotation takes hold. It's a change in sentiment, where even strong fundamental beats are no longer a guaranteed win for the AI giants. The guidance wall claimed more victims in the software space this week. Paul highlights that despite reporting strong revenue growth, CRVW missed on profitability and issued a weak outlook for 2026. Duolingo faced a similar reset. According to Paul, their full-year guidance triggered a wave of price target cuts that overshadowed solid trailing performance. These moves suggest a shift in sentiment, where top-line growth is no longer enough to satisfy investors if margins are under pressure. The market is setting a much higher bar for AI and software growth. Looking at the week ahead, Broadcom's earnings on March 4th stand out as a major test for infrastructure demand, especially as the stock's technicals have shown some recent fatigue. In the space sector, Paul reports that Rocket Lab has confirmed a delay for its Neutron rocket launch until late 2026. Meanwhile, Sven Carlin highlights Amazon as a potential value play,
arguing that its current valuation is backed by real infrastructure spending, rather than speculative hype. Looking at the catalysts ahead, Broadcom's earnings on March 4th will be a major read on AI infrastructure demand, especially with the stock showing some technical weakness lately. Meanwhile, Rocket Lab has confirmed its Neutron rocket launch is now delayed until late 2026. This pushback adds more weight to the margin pressure the company is already navigating. To wrap up, our watch list starts with where we're seeing the most value. Amazon stands out as a growth at a reasonable price play, backed by infrastructure demand rather than speculative AI hype. We're also monitoring the travel sector, where Viking and Embraer have strong backlogs but face event-driven risks. The big catalyst ahead is Broadcom's earnings on March 4th. It will be a crucial read-through for AI chip demand. We're also watching for support in Rocket Lab after the Neutron delay. Finally, keep an eye on 10-year yields to see if safe haven demand holds up against the reality of hot inflation. Stay disciplined as the market shifts toward inflation defense and geopolitical awareness. We'll be back Monday to preview Broadcom and the weekend's macro developments. Thanks for watching, and remember to subscribe for daily updates.